Hey everyone, welcome back to Corporate Decoder, the place where we unpack those dry sec filings to reveal the juicy truths behind the numbers. And today we've got a real doozy from VIP Play Incorporated that might just make you say, hold my virtual chips. So VIP Play Incorporated gives us the latest update on their financial situation. And it's all about a revolving line of credit that's, well, it's getting pretty interesting. Now, back in April of this year, VIP Play told us they had a credit line with Excel Family Partners. LLP, this credit line was a bit unusual. It wasn't a set amount they could definitely borrow. Instead, Excel decided if and when they would lend money, and loans could be made over and over again up to $14 million. But here is the kicker, and this is vital for understanding what's happening now. Once you paid back some of that money, you couldn't borrow it again. It was a one-time shot for any amount paid back. Fast forward to October and things have changed quite a bit. VIP Play has borrowed a total of $810,378 more on top of what they already owed. This means as of October 24th, 2025, the total amount they owe under this demand note has ballooned to $19,657,043. That is a significant jump from the initial outstanding balance of $12,097,000 when they first signed this amended agreement. And how much is this line of credit costing them? Well, all the money borrowed accrues interest at a fixed rate of 12% per year. That is a pretty high interest rate, especially when you consider the principal is constantly changing. Now, if VIP Play fails to meet any of the terms of this note, or if they run into bankruptcy trouble, Excel can decide to increase that already high 12% interest rate by another 2%. So the interest could climb to 14%, which is getting quite expensive. But the most interesting part, the part that really tells a story about what might be happening behind the scenes, is this conversion clause. Excel, the lender, has the option to convert all or part of the debt they are owed into VIP Play's stock. And here is the kicker. They get to do it at a price that's 80% of the lowest price VIP Play's stock has sold for to an investor or lender in the last 12 months. If they haven't sold any stock in a year, that lowest price defaults to 50 cents a share. Think about what this means. If VIP Play's stock price is struggling or has been low, Excel can convert their debt into shares at a significant discount. This effectively dilutes the ownership of existing shareholders because more shares are issued. This is a common strategy when lenders want to get their money out but also want to benefit from potential future stock price increases. It's like they're saying, if you can't pay us back in cash, we'll take your company's ownership at a bargain price. This whole situation is laid out clearly in this document and the referenced note. VIP Play took on this debt and it's growing. The terms allow the lender to convert that debt into stock at a price that benefits them heavily if the stock price remains low. It's also worth noting that VIP Play has elected to be treated as an emerging growth company. This usually means they're a newer company that can take advantage of certain regulatory flexibilities. However, in this context, the big story isn't about their growth stage, but about the financial obligations they're managing with this convertible debt. Now, looking at all of this, VIP Play is clearly in a precarious financial position. They borrowed a substantial amount, the interest is high, and the repayment terms are demanding. The convertible note feature is a significant risk for current shareholders, as it puts them at risk of ownership dilution. The company's ability to manage its debt and potentially improve its stock price will be critical. If the stock price doesn't rise significantly, Excel will likely convert its debt, leading to more shares outstanding and a lower price per share for everyone else. The company's direction here is heavily tied to its ability to generate revenue and profit to pay down this debt or to significantly increase its market valuation to make the stock conversion less attractive for Excel. The main risk is the company's continued reliance on this type of financing, which can lead to a downward spiral if not managed carefully. That is our breakdown of VIP Play Incorporated's filing. What is your take on these debt and conversion terms? Do you think VIP Play can navigate this, or are existing shareholders in for a rough ride? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community. The link is in the description below to join the conversation. Thanks for watching. See you next time.